yours.
Okay, good evening, everyone.
Good evening.
All of you got good dinner? Or
Yes.
not? Huh?
Yes.
Too much dinner. You fall asleep after this. Huh? Okay. Anyway, it's glad that I see some of the familiar faces, some new faces. So tonight, as Thomas said, it's going to be very technical. So I just hope that for those of you who doesn't have PA background, you might struggle a bit. Okay, but anyway, I'll try my best to try to explain as simple as possible. So tonight, it's about swing trading. It is one of the strategy that it is very, very comfortable for most people who have a day job. People like CD, okay, he has a very hectic day job. So swing trading is a very preferred method to trade the market because you are not looking at, a few minutes. You are looking at 2 to 10 days. So my definition of swing trading is 2 to 5, 5 to 10. Anyway, so I will start off by just talking about some of the things I do. As you can see, I wrote many books. The reason why I wrote this book is because when I conduct a program, okay, for example, price action trading, there's no book that I can use on price action trading. So because of that, I could write a special book called Trading Naked. So this is a book that's written by me just to teach people about price action trading. And I started this program about 15 years ago. Right. Okay. So through the years, as traders get more sophisticated, they are more experienced. So I have to teach them new things. For example, that little book there, price-driven trading. It is a very, very technical book. It's for people who want to further their PA knowledge to trade, for example, fast-moving markets, to trade multiple currencies, multiple instruments. Okay? And the last 2 books are purely for professional traders, okay, who want to seek consistency in trading. So I make them go through a workshop that will complete 26 exercises. Okay. Okay, for those of you who are new to TRT, let me just say welcome to the community. I'm a volunteer here, okay? But I trade professional as a trader. As a private trader, I trade my own funds. In the old days, I used to trade with institutional funds, so it's different. So I cannot afford to make losses, okay? Right. At the same time, I also like to contribute to the community centers, community of traders. So as you can see, I'm a volunteer here. I try to give two talks every month. My background is, of course, finance and economics. That's where I did a lot of my work. I've been trading over 30 years. It's more than 30 years. In all the market that most of you are trading. Stocks, futures, currencies, commodities. And the hottest item today is, of course, gold, as you know. Okay? And in my last reunion dinner, I told everyone to buy gold. So most of them jumped me and bought gold. So today gold has already hit 4,000. Okay, yeah. Of course, I spent my corporate life as a banker. Started off in the central bank, then moved to the private banking. Okay, just a disclaimer. Tonight's talk is purely educational. I'm not going to give you any tips on whether to buy NVIDIA, okay, or the Magnificent 7 stocks, okay, or whatever, right? Okay. if I use some of these references, it is purely to illustrate certain points. Okay, so you really want to get financial advice, the best person is your broker because they are licensed by MAS. So do talk to them if you really want some financial advice or trading advice or investment advice. For those who have been trading long enough, you know the number one rule of trading is always risk management. Okay? So you got to protect your downside risk with proper, robust risk management. Okay. So tonight, talk is purely swing trading. Okay? And as I said, as I go through this talk, they'll be quite technical. Okay? Yeah. Couple of questions I need to ask. Why people want to swing trade? Okay? They swing trade because of certain reason. Okay, as I mentioned, one of the reasons is they are not going to stare at the screen. Okay, they just have to put a trade. Okay, we say it is the most comfortable way to trade the market because you do all your research, okay, do all your planning, you come up with a strategy and then you just put in the order. Then you just leave it there, okay, for 1-2 days. So when you swing trade, I'm going to share with you a couple of strategies that is widely used by most traders and how to swing trade. Going through some of the example, and finally, the question that most people ask is how TRT can help you in your trading journey or in your trading objective. Huh? And I'm going to wrap up with a question that you might have, and I'll try my best to answer them. Okay, so what is trading? Anyone? Most of you are trading, right? What is trading? Wow, it's pretty, suddenly there's, all of you are very quiet. Huh?
Exchange or something.
You say what, exchange or what?
Exchange.
Okay. Any volunteer? What is trading? You guys have been trading, right? Some of you have been trading for years. What is trading? Huh?
Speculation.
Speculation. Speculation for what?
Speculation that the price will go up and you make a profit.
Oh, so you buy low, sell high, is it?
See, huh? I charge
Win or
you.
lose.
Win or lose, okay? Any more? That's all.
Calculated risk.
So I think most of you have in mind that trading is to make a lot of money, isn't it? Yes, no?
Yes.
Okay, for those of you who have just attended my Saturday class, I give them a test, Okay, basically they answer what? 3 questions? 3 questions. Right, the first question, why you want to trade? Okay, why you want to trade? And why do you think you can be successful? Okay? And for those of people who say the number one motive to trade is to make a lot of money, I explain to them why that is a very bad reason to trade. Okay? So if you come with the expectation that you're going to trade to make money, then I'm sorry. Okay? You'll be very, very disappointed at the end of the day. Right? If he can testify that fundamental question, why you want to trade? Right, David? Okay. So if you look, so you open a chart, right? And you look at this chart, what does it tell you? Our friend says speculate, right? Okay? So in other words, he's going to buy here, right? Okay? Right, and then buy here and sell there, right? Okay? It looks that simple, right? Unfortunately, it's not. So a lot of things in this market, okay, that you think is simple, deceptively very simple, right? Buy here, sell there, right? Okay? Or sell there and hope the price will drop. Okay, let me just define the classical definition of trading. Like what she said, buying and selling instrument, like stocks, bonds, currencies, commodities, or cryptocurrency, right? Just buy and sell, okay? Buy low, sell high, right? The trend trader will say, buy high, sell higher, isn't it? Right? Sell low, buy lower, right? Isn't it? I mean, these are trend traders. Okay, it defies conventional wisdom, right? Buy high, sell higher, right? You know, I buy a gold at 40, 50 today and sell at 4,100, right? The fundamental economic idea of trading is this thing called demand and supply. Okay? To put it very simply, it means this. Everybody knows that the market consists of buyer and seller, right? The question here is buyer and seller of equal strength. This is what we call a balanced market, right? Isn't it? A trader doesn't like a balanced market. Yes, no? It is only when you got aggressive bulls or aggressive bears, then you see the demand and supply equation is not balanced. Now this is where we find opportunity to trade the market. It is not when bulls and bears are of equal strength. Okay? Right. So I always like to tell people, look for aggressive bulls. Huh? Okay? Right. So over here, can anyone tell me where is the aggressive bulls? Right? Anyone? You should be able to tell me where's the aggressive bulls, my friend. Okay. Or have you able to find where's the aggressive bears? Over here, right? Or where do you find any aggressive bears here?
Long green bonds.
My goodness, you got to go kindergarten and say, okay, green means bear. No, it's the opposite.
Yes.
Green is bull. Aggressive bear, bulls is here. Aggressive
Yes,
bulls. Okay, now. This is where you got the market is imbalanced. That's why when you look at aggressive bulls, you can trade. Aggressive bulls, you can trade, right? Isn't it? This market is very well trained. Huh? Okay. Yeah, I'll see you tomorrow.
Yeah.
Okay.
Okay, gentlemen, enjoy yourself.
Bye.
You want to drop me a message and have a discussion with you. Okay, except you don't need. Unless you bunch me lunch, we can discuss the supply law and secret methods.
So what I just said is fundamental of candlesticks. Okay, fundamental of candlesticks, which is I call it kindergarten stuff. Demand and supply, understanding the aggressive bulls, aggressive bears, which led to this question about you aim to make profits from what? Price fluctuation, isn't it? If there are no price fluctuation, you can't trade, right? Because there's no money to make from the market. Okay? So that brings me to this question about, what are the ways you trade? Okay? The most common way to trade is scalping, okay? Scalping. Or what I call ultra short-term strategy. In other words, you trade on 1 minute, 2 minutes, 5 minutes. So how many actually trade 1 minute, 2 minutes, 5 minutes? This young boy trades 1 minute, okay? I trade 2 minutes. I used to trade 1 minute, but today I can't. I only trade 2 minutes. Okay? And with 2 minutes, I close my trade in 16 minutes. Right? So if he trades 1 minute, he closes his trade in 8 minutes. Yes? No? You're very surprised, right? That is how fast scalping or short-term trading. Okay? You carry it out, okay? Less than half an hour. Okay, then we talk about day trading. Okay? The good thing about day trading is you don't carry position overnight. Okay, there's no exposure, okay, after 4 o'clock in New York market. Okay? You know, you just square all your trades, okay? Right? Then we talk about swing trading, which is what I'm talking about today, right? You carry the trade, okay? Overnight. 2 days, 3 days, 4 days, 5 days. So for people who trade 2 to 5 days, I term this trader as guerrilla traders. Okay? You know, so they open a trade on Monday, they close by Friday. No weekend exposure. Guerrilla traders. Okay, the traditional swing trader carry the trade, okay, up to 10 days. Okay? Then of course the longer term traders, what we call the positional traders, they carry the trade weeks, months, okay, and sometimes years. Okay, this is not the trader I'm talking about, okay, because these are basically investors whose position of trading is more on value, okay. You all know the difference between long-term investing, long-term trading, right? The objective is not the same as trading, You're okay? The difference? Okay, one is to create what I call generation wealth, long-term, right? Trading is purely for income. Okay, so if you want to create wealth, then you go for positional trading. Okay. My definition of trading is very simple. Okay. It is simply a transfer of money. Okay, for those who know what they are doing. The key word is you know what you are doing. Unfortunately, many retail traders doesn't know what are they doing. Okay? They put in the trade. You ask them, why are you putting in this trade? Why are you putting this order at this price? They can't give you a logical, rational answer. Okay? Because they don't know what are they doing. They've been sucked into the market. Okay? Maybe they listen to Jim Cramer, right? Jim Cramer say, buy Google, okay? Buy Nvidia. You just go in. Okay? They've been sucked into the market, okay, unconsciously. Oh, they look at social media, right? TikTok, right? Okay, influencer telling them to do this and do that. Okay, I can tell you, majority of retail traders do not know what they're doing, and that's a fact. Okay. So, on the other hand, if people who know what they're doing, they are different. I call them, they are different breed of traders. Okay? They are professional, they are disciplined, they got a plan. Okay? So basically there are two groups of people. Okay, one who consistently make money from the market. Okay, unfortunately, it is a minority for retail traders. Okay, the retail traders are those who consistently lose money. You know, they give money to the market. And that's the majority of people, unfortunately. So that brings me to this question, why retail traders find it so difficult to trade? So what are the issues, what are the challenges? Okay, there are many, right? I call them the hard truth of trading, or the reality of trading. And this is not for me, okay. It is from this guy called Noble, who says 95% of retail traders lose money in financial markets. 95%, that's huge. Huh? Only 5% actually make consistent profit. Does it sound familiar to most people? Or is very shocking to most of you? Only 5% make money. Okay? And you can go and read the thesis from this publication. Okay, winning the trading game. Why 95% of traders lose? And what are the 5% of traders do differently? Anyway, I'm not going to go through the thesis. I'm just going to share with you a couple of key points. Okay? The key point is the 95% who lose money, they are trading with emotions. Emotional trading, revenge trading. And you know, in trading, 60% success is based on psychology. 60%. Okay? So, it will not be a surprise to most people to find that trading with emotion is real for most people, 95%. Okay? So that's the reason why in all my program, I condition them, okay, before they actually look at strategy or look at trade management. Condition yourself first. Okay? What I call psychological preparation. You must have that psychological preparation. If not, you'll be among the 95. Okay? They got to go through this thing called psychological preparation. What does it mean? Simple term, right? Do you understand your state of mind? Do you understand your emotions? Okay? Do you understand how you manage, okay, your cognitive biasness? That's it. And that's the foundation of the 5%. Okay? So you can see that emotion is a big, big problem for most retail traders. Okay, what are those? Okay, greed, fear, right? The two most important emotions, fear and greed. Okay? Then what are the 5% they're doing? They select trades properly. All my programs, I just want people to do 8 things only. 8 things. The number one thing they must start off with, they must identify the trade opportunity. They must identify trade opportunity. That's it. If you cannot do item number 1, don't do 2, 3, 4, 5, 6, 7, 8. Okay? If you cannot do number 1, then please don't waste your hard-earned money. Okay? Identify the trade opportunity. So then you can place your trade confidently in the market because you have done your proper analysis, you understand the setup, then you know there's a trade opportunity. Okay? And believe me, right? Understanding the trade opportunity is so simple, right? Remember I said, are you able to identify aggressive bulls? Aggressive bulls, for those who are trading, okay, what I call the trending market. Identify a aggressive bulls. It's the trade opportunity. Right? Yes, no?
Yes.
It's pure common sense, right? You are going to ride the aggressive bulls for the uptrend. And if you are able to identify aggressive bulls, that is a trade opportunity. Okay? Then of course, on the downside, you are able to identify aggressive bears, then you're able to short the market down. Okay? That is number 1, trade opportunity. Then after you put in a trade, you monitor the trade, you exit the trade. You only make money when you exit the trade, okay? If not, then it's just, your paper loss or paper gain, right? It's only when you exit the trade, okay? And exit the trade basically means emotions, psychology again. Right, greed comes in, okay? And believe me, right? When you really put your money and trade the market, fear and greed comes in, okay? So I just want to summarize a couple of key points, okay? Trading is simple, but not easy, okay? It looks simple, right? I just show you, the chart there, okay? It's simple because everyone can just put in $500 and open a broker account. I think nowadays some broker requires only $500 deposit. That's it, okay? You deposit $500, you can trade. So when you really open your platform, then you find that it's not easy to trade, okay? As traders, losing is part of the game, and you should expect losses, okay? You have to have a mentality that if I put in a trade, it's going to lose. But you got to put your stop loss, okay? And the number one rules that I impose to all people, please know your maximum loss per trade. Always remember, when you put in a trade, what's your maximum loss per trade? If you do not know maximum loss of trade, then trading is not for you. Because that is the paramount rule of trading, maximum loss per trade. You put in a trade, let's say you put in a gold trade at 40.50, okay? What is your maximum loss for that order? $500? $20? $50? You got to define that, okay? If you cannot define your maximum loss per trade, then you are no more a trader. Period, that's all, okay? And you should always expect losses. You expect $500 per trade, a loss, when the stop loss got taken out, you should be happy about it, okay? And not be sad. Unfortunately, most people, when they hit the stop loss, they can't sleep, they can't eat, okay? They quarrel with their friends, they quarrel with their bosses and all that, okay? Psychological effects. Because they don't understand that trading is about making losses first. It's a property game, okay? If I put in a trade and identify the aggressive bulls, I know my probability is 70% follow through. Okay? In other words, 7 out of 10 times I win. 3 out of 10 times I lose. I know my probability. Okay? That's the reason why when I see aggressive bulls, I put in a buy order. That's it. I know the probability is on my side, 7 out of 10. Okay? So if you do not know your probability, then I think you are not trading, you're just gambling. Let's be honest, okay? It is better for you to go and queue up and buy the 4D or Toto, right? You make more money. Or you go to RWS or MBS, right? Isn't it? The odds are better. Because trading is a probability game. Always remember that. And you have to know your probability when putting a trade. Okay? It is not a get risky, okay? By the way, if people tell me that why they trade is to make a lot of money, then they belong to this get rich scheme. Because the mentality is they come to this game to make a lot of money. Unfortunately, you know the statistics, right? 95% is going to lose. Okay? So you come with a mentality to make a lot of money, but the statistic doesn't work in your favor. Okay? And there's no guarantee for profits. Today, I could be on a winning spree, but tomorrow it's a different game. Okay? So I cannot carry my mentality of winning today to tomorrow's market. It doesn't work. Tomorrow is a new game. Okay? And there's no guarantee for profits. Okay? If I do not do the right thing, I will suffer losses. That's for sure. Okay? Unfortunately, there's no holy grail in trading. Sad to say, when I look at TikTok, when I look at social media, Facebook, everybody out there is saying, okay, you put in $1,000, you risk $1,000, you get 3,500. You risk 10,000, you got 15,000. Okay? It looks so simple, right? Unfortunately, I know there's no such thing as holy grail. I've been trading for 30 years, mind you. Okay now. So if you tell me there's a holy grail, I'm prepared to, listen to you, right? Okay, and you tell me that your system guaranteed to make money, I'm prepared to put my money with you. Okay? Unfortunately, you need skill. Okay? And our government defines skill as 10,000 hours to learn one skill. Okay? That amount of hours you need, okay? 10,000 hours to acquire just one skill. So why only 5% makes money? Okay, let's explore why the minority of traders makes money. And what does it take to be 5%? So when you come to this game, your number one objective is I want to be the 5%. I do not want to be a 95% out there. Okay? So let's look at, what the professional traders are doing and what the retail traders are doing. Number one on my list, proper education. When I say proper education, I really mean proper education. Do you learn from somebody who has gone through that cycle many, many times? Okay? And you look at retail traders, little or no education. And worst of all, most of them they learn by watching YouTube. Okay, no? So do you think you spend 3 hours watching YouTube, you got the skill to trade the market? Unfortunately, this is the perception most people have. Okay? Worst of all, they listen to somebody like him, right? Who attended one seminar and said, oh, he can fly, Right, okay, so you learn from these guys. Okay? I hope you're not teaching other people. Okay? Right. Okay, that's the reality of life. Okay? You got to have proper education. Okay? I don't understand people that they can risk $30,000, okay, without having a proper education. They don't even go through basic candlestick education. Basic candlestick, okay? Understanding basic candlestick. What is aggressive bulls? What is aggressive bears? What is a doji? Okay, what is the high wheel? Okay, and all that. I'm not asking them to learn about abandoned babies, okay? I'm just asking them basic candlestick 101. Proper education, okay? And that's the reason why I wrote this book, 8 Candlesticks That Matters. It's only a 100-page book, but it gives you everything you need to know about candlestick trading. Okay, excellent discipline, very important. Okay, You got to have a plan to execute. Unfortunately, most retail traders, they don't have a trading plan. So if you don't have a trading plan, my goodness, how do you trade the market? Right? Trading 101, you've got to have a trading plan. Right? Just imagine you run a retail business, huh? You don't have a business plan. Then how you going to get a customer? How are you going to operate the business and make money? Same as trading. In trading, if you don't have a trading plan, you are doomed to fail on day one. Believe me. That's the reason why I always insist. Okay, they have a trading plan. Okay, and I'm prepared to review the trading plan and tell them what need to be included in the trading plan. Okay? I talk about managing risks. Okay? Fixed loss per trade. Always remember, fixed loss per trade. If you don't have a fixed loss per trade, then you are not trading, you are gambling. Because you don't understand the downside, okay, of the trade. Unfortunately, most retail traders, they do not manage risk. Okay? Of course, I talk about emotions. Okay? You should expect retail traders to have difficulty managing their emotion. And last Saturday, I made all of them take through the personality test. Okay, there were 7 of them. He was one of those guys, okay, who took the personality test. Why they took the personality test? Because I want to know their level of neuroticism. Okay? The level of extraversion. That's the most important thing, okay, in understanding about the person's behavior. Fortunately, he stands out because he got very low neuroticism, he got very low extraversion, right? So that's the reason why, okay, he can be a very good trader. So I judge you whether, when you do the test, whether your score of N is very high or E is very high. Okay? And that's because you understand how to manage emotions. Continuous education. Okay? That's the fact of life, okay? Even you are experienced trader, you need to keep up, okay, with technology, right? And what is technology today? Everybody talks about American intelligence, right? Huh? AI. American intelligence. Daniel, is it correct? Okay, I'm just joking.
Yeah.
Hey, you guys are very serious. Okay. So I just want to.
China intelligence.
Okay. So today everybody talk about AI, right? You know, if you go to a coffee shop, you go, you know, and then obviously I network a lot. Okay? Every time I go to a dinner or lunch, do you know what is AI? I say I don't know about AI. Okay, tell me what is AI. So everyone try to educate me about AI. Right? Okay. Okay. So that is to me is continuous education. Okay. Okay. That is only a brief introduction. Okay. Today's topic is about what is swing trading. So what is swing trading? Anybody give me an answer? Those of you who have been trading. No? Wang, you want to give your views about swing trading?
Usually.
Yeah, you're swing trading, right? You swing trading with FX, right? So what is swing trading?
Buy and wait.
Okay.
Simple.
Any other different views? No. You guys are real quiet, no? Right. You should interact with me, okay? Right? Okay.
Swing trading means trading for more than one day.
Yeah.
But depends, sometimes can I mean, your definition is up to 10 days, but some people say up to weeks can also be considered swing trading.
Technically, the market, when it goes out, it goes low, and then it retraces to a level and then goes up. So we mark it as a swing low. Similarly, bearish market, it temporarily goes up, retraces, and we mark it as swing high. So we use these patterns and we start from there.
Okay.
That is swing high.
Excellent, excellent. Huh? Okay. So swing trading is the art and science of profiting from securities, right? Short-term price movement, ranging from 2 days to a maximum of 10 days. Okay. As I said, my definition is if you hold a trade for 2 to 5 days, technically you are what I call a guerrilla traders, okay, which is a special aspect of swing trading. And that is the one that I recommend because you don't carry weekend risk. Okay. Whereas there are people who carry the trade up to 10 days, okay, they incur what I call a weekend risk. Do you know why Black Monday or Black Friday always appear? It's because of things happening over the weekend, right? So you trade swing with up to 5 days, you are protected from that weekend, risk. Okay? The industry has a lot of different names for swing trading. Okay, some call it momentum trading. This guy calls trend trading. Okay? Then there are people who use very sophisticated things like riding the wheels, right? So like surfing like that, okay? Right. As I mentioned, it is the most popular strategy for most retail traders, because as I said, most people they work 9 to 5 day job, okay, then they got maybe 2 hours or window to trade, and what better way than just to swing trade, okay? And the advantage is because they exploit the natural advances. In other words, they look for swings. Okay? Because they identify aggressive bulls to buy, okay, a buy trade. Okay? A buy swing. They look for aggressive bears to buy to trade the shorts. So who are swing traders? They can be individual or institution. Okay? For example, most hedge funds, they use swing trading in the strategy. Why? Because most of them, they carry the trade over a couple of days. They are really 100% invested in the market. So in other words, these institutional hedge funds, they are basically portfolio traders. In other words, they swing trade. They also do what we call sniping or scalping. Okay, they also do positional trading. So when the overall market is riding high, for example, now the good example would be gold. Gold is just, going through a very fierce bull run, okay, non-stop. So you never see any correction, okay, or any retracement. You just, every time market open, the price just go up. Okay, it's a one-way street. Okay. So when the market doesn't move, okay, swing trader don't trade. Because the fundamental tenet of swing trading is they must be a swing. Okay? Are you telling me to take a break or what? Okay?
Trade
alert. Okay. So if the market goes sideways or range bound, swing trader would, take a breather or they don't trade. Yeah. Okay. Yeah. Unfortunately, most retail traders, they don't differentiate between a range bound or swing. So range bound, they also swing and trade. Okay. Now this is a chart that I normally explain to all my participants of the significance of this. Okay. So for swing trading, okay, if you are looking for a trend, then it will be weekly. The setup will be 4 hours, and the action will be 60 minutes. Okay. Okay. The rest are intraday or scalpers. So swing trader align with their personality profile. In other words, can you tell me that you can trade swing? Okay? Most people, they just do trial and error. Okay. Right? Without taking a personality assessment test. Okay. So if you really want to understand whether you are going to be a good swing trader, I suggest you just do the personality assessment test, and that's a very objective test to see whether you are good in swing trading or not. Okay? So this is what I explained. 2 to 5 day, you're a guerrilla traders, and 2 to 10 day, you're swing trading. Okay? And then beyond that, you're core trading. So what in actual fact you are trading in swing is basically you are trading on swing high. We call it technically it's a peak. Okay? And you swing low, right? We call it a value. Okay? Okay, so this is the value, and this is the swing. The job for swing trading is to enter here, and then out there. Okay? They're right. And when the market reverses, they're right here. That's all the swing trader needs to do. Okay? Trade here and trade there. So you gotta understand this thing, what is a value, what's a peak. Unfortunately, most people do not understand what is a value. Okay now? And most people don't understand what's a peak. Okay, so you end up, what happened? Most retail traders, you enter here, right? So here you enter there, right? As the result, when the market turns, all their trades is all taken out. Okay? So you have to understand, okay, what I call the trade signal, right? Okay. So in the market, you've got swing high, swing low, right? Okay, so that's actually what happened. Okay, you've got a series of swing high, swing low for a defined uptrend, and for a series of swing low, you define as a downtrend. Okay. So the market do not, travel in a straight line. Okay, it go up, it retrace, it go up, it retrace, it go up. Okay? Right. So that applies to uptrend, and that applies to downtrend. Okay? So most swing trading traders employ swing charts. So one of the things that if you want to be good as a swing trader, you got to use a swing chart. How many of you who trade swing and do not use a swing chart? Anyone? Raise your hand. Come on, I think most of you, some of you are swing trading, but do not want to tell me that they're using a swing chart. Okay? They use some funny charts, I don't know. Okay. So basically that's an example of a swing chart. Okay now? Okay? So you can see this is a swing up, right? Okay? So there's a swing down, right? So if you are truly a swing trader, then you use a swing chart. Okay? Because it defines the valley and the peaks. Okay? A turning point, we call it, okay, or pivots. Yes?
Is the swing chart like a feature on the platform?
Yeah. If you pay money to a broker and they give you a platform, right, please ask the broker how to
Configure.
use your swing chart. Okay, they'll tell you, right? If you don't ask, of course, they won't tell you, right? Okay, yeah. Okay. A swing chart is just, we call it a reversal chart. In other words, from valley to peak, okay, peak to valley, just reverse, okay? Obviously, it filters all the noise, huh? In the swing charts, okay? Now? So, all the noise it filters. And that's why when you look at the swing chart, you really know the valley and the peak and the valley, okay? Because all the noise is taken out by the swing chart, as you can see just now, okay? Right. It only shows you the two most important things. All I want to know is where is the valley, okay? Where's the peak? That's it, right? All the noise in between, I'm not interested, okay? Because I'm not day trading, I'm not intraday trading, I'm not scalping. Always remember that. Swing trader is just to ride the swing. Okay, so I need to know the valley and the peaks, that's all. Okay? This is what I mean. Okay? So, if you are really a good swing trader, then I'm going to ask you two questions. Tell me where is the peak in your chart? Where is the valley in the chart? If you cannot explain to me, then I can always tell you. You've got to learn to be a swing trader. Okay? Okay, so you can see the valley and the peaks, okay? Right. So why trade with the swing charts? Okay? Because you're going to apply this thing called swing strategies. Okay? Fundamentally, if you don't have a swing chart, then how are you going to apply your strategy? Okay? You can use, okay, my favorite one, of course, Elliott wave to trade the swing. Okay? Then, when you want to understand and analyze the market you're trading, using swings, okay, right. Of course, you will use in conjunction with candlestick chart, okay, as you can see there, okay. So if you are a swing trader, you have to define what they call a pivot turning points, okay? Okay? Right. So I won't go into that, the algorithm, okay? Now. I did mention that, that swing trading has been around for many, many years, okay? Some of this theory is before my time, okay? Now. Okay. My favorite one is, of course, W.D. Kang. Kang is the master of swing charts. Okay? I studied gang, that's why I know about the gang swing charts, okay? Right. How many actually apply gang strategy? I'm surprised. If you learn gang strategy, okay, or 4/8, you're a damn good trader, okay? Right. Because gang is the only guy who tells you, okay, 4/8 is a very, very important level. 4/8. Okay? In other words, if today market, you look at 4/8 all the time, okay no? What is 4/8 in arithmetic? 50%, right? Yes. So gang is a guy who tells you 50% market is the most important level in the market. Okay? Believe me. And that is confirmed also by Fibonacci. Okay? If you learn TA, your instructor will probably tell you about Dow theory, right? Okay? Right. If you really want to be a good swing trader, then you got to understand about this guy called, okay, Charles Elliott Wave. Okay, no? Okay? Gartley is a fantastic, okay, price pattern. That's provided you know, okay, Elliott Wave. You also know about retracement. Okay? Because Gartley is a combination of Elliott Wave and retracement. Okay, right. So if I tell you that if I look at this market and I spot a Gartley pattern, I'm always sure that I will make money, right? Not 100%, okay, right? But very high probability of more than 80%, okay? Okay? So that's the reason why I'm a great believer of Gartley, okay? Gartley basically means you understand Elliott Wave. Okay? That's Elliott Wave. Okay? And you got the A, B, C, right? Okay? A, the B, and the C. So if you combine that, right? Okay? And that's your trade opportunity. You can be sure that this is going to be a rocket, okay? That's Gartley. Okay? Right. So Gartley gave you a point that you can trade well, okay? Unfortunately, Gartley is the most unknown trader in the world because very few people understand what is he talking about, okay? Right. Essentially, that's it, okay?
You say Gartley is the combination of Elliott and
ABC.
ABC.
Correct. Okay. Right. Okay, then CB. Then good. My goodness. I think most of you will not know this guy Goodman, but it is a fantastic swing strategy, okay? Right. And of course my good friend Barrows, okay? Okay. Barrows is one of the founder of TRT. Okay. Yeah. So anyway, so I give you all the 6, okay? You choose and pick which one, okay? No? If you are good, you learn all, but I think if you can master 1 or 2, fantastic, okay? Right. By the way, these are foundation, okay, no? Of swing trading. It's only a foundation, no? Right, okay? Okay. Now gang also tells me that the angle of the swing is very important as well, okay? And most of you who makes money, okay, trading the uptrend, doesn't know that the 45 degree is so important. Okay? Right, okay? Basically, that's it. Okay? Okay. Okay, Dal. I think most of you who study TA will know about Dal. Okay, okay? Right. So basically, the most important thing about Dal is there's this thing called a confirmation there, right? Okay? Any of you can tell me Dal famous concept is confirmation, right? Yes or no?
Yes.
What is confirmation? Anyone? Right.
Go inside and down.
Dal is the most classic case, okay, for investor. And for investor, they need confirmation. But as a trader, I don't need confirmation. But, okay, Dow theory started on that basis. In other words, if you look at a Dow Jones Industrial Index, it must conform with the transportation index. Okay, to confirm that this is a bull market. That's the definition of Dow theory. Okay. And of course, the most famous part of Dow is, you know, market got three phases. Okay, okay? Right. What you call the accumulation phase. Okay, then you got the trend phase, okay, and the distribution phase. Okay. I just want to cover all these things because it is very important that you have a understanding of what swing trading is all about. Okay? I don't expect you to go into, you know, the detail, understand, okay, what's LA wave, no? Okay? Because LA wave is very complex. It can be very confusing for most people. Okay? And when I teach LA wave, it's 2 weeks course. Okay? Okay? Right? So I don't expect a 2 weeks course to compress into maybe 5 minutes. That will not do justice. Okay. Anyway, so the principle of LA wave is that when the market goes wave 1, wave 2, it's all based on what? Human psychology. Okay? Right. Look at this one here. Wave 1. Okay? It goes up. At some point, there'll be a correction. Some point, yeah? Okay. So you look at today, S&P 500, look at NASDAQ 100, okay? At some point, you've got to correct, okay? At some point, okay now? Okay? Right. And that's the beauty of LA wave, okay? It's based on what? Psychology, okay? Human psychology, okay? So LA wave call this thing, okay, impulsive wave, corrective wave, impulsive wave, corrective wave, impulsive wave, okay? Yeah. Then finally you got the ABC correction. Okay? I talk about Gully. Gully is my favorite, okay, wave pattern, and I use that all the time because it combined with Fibonacci. Okay, okay, right. Okay, you want to take the pictures, so it's an XABC there. Right, okay? Okay, good man. Good man is the swing 101 basic, okay? Right. Seriously, people learn about, swing charts, they're using what called Goodman theory. Okay, lah? It goes like that. Okay, right. So you got swing 1, retrace, swing 2, right? So Goodman just say, okay, why don't you just join this here to here? That's it. The belly and the peaks. Okay, that's Goodman theory, which is the foundation of swing chart. Okay, yeah. Okay, Barrow swing. Okay, my good friend Barrows. He's a fantastic swing trader. Okay, no? And he come up with his own swing called the Barrow swing. Okay, which works on different parameter, of course. Okay, right. I don't go to all that. Okay, yeah. So that's his definition. Okay, right. So his time frame is 5 days swing weekly, 18 days swing monthly, 13-week swing quarterly, 12 months yearly, 13 months, 2.5 years. Right, okay, so basically he defined swing according to these parameters. Once you introduce the parameter, you got a Barrow swing. Okay. Something like that. Okay, lah. Okay. Well, you want to. Danny, you want to learn about Barrow swing? Huh?
Barrow swing.
Does he still come to Singapore?
Huh?
Does he still come to
Of
Singapore?
course, lah.
Yeah,
You always come here, what?
Yeah.
You always come to, yeah, every time you come here, Thomas will organize a talk, what?
Yeah.
Yeah, okay.
Barrow swing.
Okay. Okay, I use this term, the wheel, all the time, okay? Okay? A wave is just a line, okay, that connect various swings, okay? Okay? A cycle is just a series of interconnecting waves, okay? So you got example like that, wave 1, wave 2, right? Okay, so this become a cycle. Okay? That's why I like McCartney, because it gave me a cycle, right? Okay? This will be very technical, okay? So if you cannot comprehend, it's okay, right? Okay, but just take it as a knowledge. Huh? We are going into the 2-wheel cycle, 3-wheel cycle, 4-wheel cycle, 5-wheel cycle. Okay, no? These are fairly technical stuff. Okay, no? And if it doesn't make sense, it's fine. Okay, yeah. Okay, 2-wheel cycle basically means this. Okay, you got what we call wave 1, then you got retrace. Okay, yeah. This typically happen in all markets. Okay, yeah. Then you got this, what called, my favorite one, okay, it's the inverted V and the V. Those market that you trade, most of the time, it give you this fantastic V or inverted V. Okay? Especially you are trading on US market open. Okay? US market open always okay, give you that V and inverted V. Okay? And you are trading Forex, right? Okay. Forex. Look for dollar yen. Most of the time they give you a V inverted V. Okay? Right. Then these are all okay, this is okay, wave 1 less than wave 2. So if you behave like that, okay? Then what do? You just forecast, okay? Okay? Right. I'm not a great believer of forecasting, okay? But it so happen that you got this shape, then you find an extension of that. So this length equals to that length. Okay? Right? How wonderful if you are able to understand that this swing is the same as this swing. Okay, lah. You know how to trade. Okay, the swing.
Yeah.
Okay. My favorite strategy is a wheel. It's a wheel. Yeah.
Yes.
And I always teach wheels in all my class. Wheels is like that, okay? And wheels is based on the two-wheel cycle, okay? Then you got a three-wave cycle. That's an impulsive cycle, right? Okay. For those of you who are technical trader, you know this is a channel, right?
Mm.
This is a channel. Okay, this is a channel. So a channel actually is a three-wave cycle. Okay. Or it can be a rectangle, range bound, or sideways market. Okay. Or it can be a contracting, descending triangle. These are all three waves. Okay. Or a contracting, ascending triangle. Okay. Or contracting symmetrical triangle. Or expanding, ascending triangle. Basically, these are all three waves. Okay. Then you got the expanding symmetrical triangle, connector, a down channel. Okay, let's move on to the four-wave cycle. Again, this is a four-wave cycle within a up channel. Okay, up channel connect the two, the peaks and the two valleys. Then you got the 5 wheels, okay? And then you got the 6 wheel, okay now. Now what is significant of all that? If you're a swing trader, you understand certain pattern up here, you know how to trade. Okay? That's it. So if the swing is two wave, you know how to, okay, you will know how to trade the two wave. Okay, because the pattern will play out. Okay. I spent almost like 5 years writing this book on price-driven trading. It's about 350 pages. Okay, right. And this book is meant for professional traders. When I conduct professional traders, I wrote this book because there's none available. So I wrote this book just for that 500 professional traders. Okay, you want to trade harmonics, okay, now? Okay, yeah. So this book is purely about harmonics, purely about the advanced price patterns. Okay, it's about 300. Unfortunately, I don't print this book anymore. This book is about the last time I saw this book was in National Library, alright, okay? And every time I went there, I asked the librarian, hey, can I borrow this book? Sorry, it's on loan. Okay, now. I went to a reference library, there are 2 copies there. I donated a lot of copies. Okay, now. Somehow, people like to read this book, but it's very, very technical. Okay, now. You talk about geometry or market, it talks about, the ratios and all that, okay? Okay. Okay, let me just show a bit of example, okay? Okay. This is one example. Okay. You can see that in this example, okay, it is a well-defined, it's a well-defined channel, right? Yes or no? For those of you who are technical traders, okay, you can see, right, okay? this is your peak, it goes on the valleys, okay, go 50%, it drops to the valleys. See, market got a habit of overshooting. Okay? This is overshooting. What's the purpose of overshooting? Give false impression. False impression that it's going to be a breakdown, right? But actually it's not. Okay, no? It's just a false breakout. Why the false breakout? Because market tricks most of us. Okay, no? Then you can see it swings up. Okay, no? But if you understand all that, okay, no? You understand that this is a down channel, then you know that the 50%, okay, channel is so important. Okay, then you can see it hits a peak, it went down again. Okay, then it really hits the top of the channel. 50%, 50%, it really have a real breakout. Okay, now, okay. So if you're a swing trader, right, you watch out for all the swings. Okay, now, you trade with certain patterns. Just imagine you are able to catch the real breakout here, the real breakout, not fake breakout, okay, the real breakout, which means say the breakout retest again, okay? Breakout retest, continuation, that's real breakout. Okay. Look at here, right? You know, breakout retest, right? Okay, retest maybe 38.2, for example. Okay, no? So you know, it break out. We test 38.2, fantastic. It's a very strong rally, right? True enough, I shot all the way up to the top of that resistance level there. Okay. So you are able to catch the swing. You just have to ride on the swing. Okay. Right. Okay, another example, right? Okay, this one was a swing up, and this is a swing down. Okay, now, okay, right. Okay. Sometimes the swing. Okay, now. So you can see I use people level, right? Okay, right. Okay, I will not go into that, okay? Right. A normal market will behave a 5 ways, X, A, B, C, D, okay? Right. And you can have this type of shape, you know, we call the range bound or sideways market, okay? Or you can form a shape like that, okay? To be a complete price action trader, you need to at least understand 1 or 2 theory about the wheels. At least 1 or 2, right? Okay. Okay. I don't need you to know all the 6. Okay, just if you really want to be a good price action swing trader. Okay. By the way, if I use the term price action, I mean price action. Okay. I mean trading maker. Okay. Meaning
No indicators.
no indicator, no oscillators, no RSI, no MACD, no Bollinger Bands. Okay, no stochastic, no RVI and all that. Okay, right. Purely looking at price, looking at patterns. Okay, right. So if you learn charting, right? Okay, now there are 3 things you learn in charting. Right? Okay. For those who have attended charting, what are the 3 basic elements of charting, anyone? Right? Come on, most of you attended Cutting 101, right? No?
Yes.
What is this?
This is time.
So it can be seconds, right? Okay? It can be minutes, it can be hour,
Day,
okay? It can be a day,
week.
it can be week and all that, okay? It defines the type of trader you are, right? Okay? So if you are 1 minute, 2 minute, 5 minute, 15 minute, then you are either a scalper or intraday. Okay? So the time element, right, is important. Then you've got a space element. Okay? Space element. Space element goes up, down, right? Okay, like space. Which is defined by price, okay? Okay? Right. Then the final one, the most important one. Okay, lah. What's the final one? It's a pattern. Okay? So you need three things: time, space, and patterns. Okay? You guys need a 5 minutes break? Because if not, I carry on, okay? If you need a 5 minutes break, just wait. Okay, let's have a 5 minutes break, okay? Okay, before we have a break, any question or not? Okay, no. Okay?
For now, no.
Okay, let's, now it's 9 o'clock. Okay, 9:05 when we start.